I'll tell you what it means is
go on, Carole.
the top 10% of earners in this country pay 60% of all the income tax. That's the reality. And when I say the top earners, I'm not talking about people on 250 grand a year. I'm talking of people 75 grand a year plus, which in London is not a great amount of money. So those are the people that he wants to tax and take money off. People with families trying to pay mortgages and all the rest. And it's silly to say.
At first glance, this sounds like another argument about whether wealthy people should pay more tax. But listen closely, because the disagreement quickly moves beyond numbers. One side argues that higher taxes are the answer to inequality. The other questions whether the people being targeted are actually as wealthy as they're being portrayed. And from that point on, the debate becomes less about fairness, and more about whether the proposed solution survives basic scrutiny.
And he's in a corner here, isn't he, Carole?
Yes, he is in a corner. You know, it was only last week the International Monetary Fund made it really clear to him that he couldn't go on a big spending spree, because what they made clear was the people who are lending us money, as that you just pointed out, you know, 1 billion a day, are going to stop lending us money if he looks irresponsible. So
you can't borrow anymore.
No, you can't borrow anymore. But you know, a wealth tax is so predictable from Labour, but so stupid. It's self-defeating. You know, a wealth tax.
People would love it, though, wouldn't they?
Well, yeah, the people would love it. But, you know, you mentioned people with 100 million in assets. There's only 4,000 of those in this country.
Well, people say over 10 million might be a way to start.
4,000 of 100. There's only 4,000 with 100 million plus assets in this country. But, you know, wealth tax, OK, one thing, it causes capital flight. Last year, we lost 17.5 thousand millionaires left this country because of Reeves's tax. Because of Reeves's tax.
So hang on a minute, 17,500 millionaires. But one in four pensioners is a millionaire. What does that even mean?
No, that's...
You're talking about people who are worth more than £1 million.
You're conflating what their house is worth to their wealth. It's an entirely different thing. I'm talking about material millionaires, people with millionaire money.
You mean cash in the bank?
This country. Yes, have
money in the bank.
But the assets are still part of your wealth, aren't they?
But no.
Well, exactly.
Well, then you've got to chuck people out of their home, and then what do you do?
Notice how the disagreement immediately shifts from principle to definition. Before anyone can debate whether a wealth tax is fair, they first have to agree on what wealth actually means, and they clearly don't.
Well, no, but it's just about...
Where would you go with a tax rise?
I think, unfortunately, when you think about what we need to do in this country, and we've got really real problems, you know, people are really struggling day to day to make things real, and there's certain parties that want to blame, you know, the feckless or people who won't work or can't work. Yeah. They want to blame immigrants and asylum seekers, but the real problem is the distribution of wealth in the country. And one of the ways to fix that is through taxation. One of the best ways to do that is through taxation. What do you mean the redistribution of wealth?
Explain what you mean.
Well, we know what he means. He means some people are too rich.
So there's this thing called the Gini coefficient. There's this thing called the Gini coefficient. It just measures how distributed wealth is. In the 40s, it was terrible. In the 70s, it was the best, actually. It was the most equitable across this country.
You're talking about when we had 90% tax rate?
98%.
Yeah.
Right.
That's
you
why. Think that's a good thing?
No.
How silly?
No. Just listen, let me finish. What I'm saying is, so there were lots of reasons why that changed. One was taxation. Others were brought in National Health Service, social housing, better employment practices, and all those things. We are progressively, since the 70s, becoming a more unequal society.
Sorry, but does it matter? I remember Mandelson, obviously scandal now, but Mandelson back in the day said Blair is extremely comfortable with people being filthy rich.
This is where the conversation becomes more philosophical. Instead of arguing over specific tax policies, they're now debating something much deeper. Should government focus on reducing inequality or simply creating more opportunity? That difference drives everything that follows.
That's what he said.
Yes.
Yeah.
And that was based on the idea that there isn't a fixed amount of money, and if some people over there make squillions, it doesn't make us poorer.
And also, wealth creators create wealth. They create jobs.
It doesn't trickle down.
The trickle down. I mean,
trickle down doesn't work.
I don't think it works. And
really?
The key is in the title: trickle.
It's
not a torrent down.
So should everyone be a multimillionaire?
No. What I'm saying is this: is that the problem at the moment is it is not equitable. Or we need to.
Does it matter? That's what. Why does it matter if someone's got a better pair of training shoes than you?
It doesn't matter. What matters? We used to be a meritocracy, right?
Yeah.
So you could go and earn money, and then you use that money to go and buy things, and it's fine. You don't all have to buy, you know, expensive things, but you should have a dignity of life to be able to do that. Very slowly, over the last few decades, we have decoupled, our living standards have decoupled from our wages and attached themselves to asset and capital.
We have 11 million people who don't work.
This is an important shift. Neither side is really arguing about tax rates anymore. They're arguing about why inequality exists in the first place, and once the diagnosis changes, so does every proposed solution.
What it means...
No, I'll tell you what it means is
go on, Carole.
the top 10% of earners in this country pay 60% of all the income tax. That's the reality. And when I say the top earners, I'm not talking about people on 250 grand a year. I'm talking of people 75 grand a year plus, which in London is not a great amount of money. So those are the people that he wants to tax and take money off. People with families trying to pay mortgages and all the rest. And it's silly to say, let's keep on rinsing the rich. All it is the politics of envy. That doesn't work. Because if you get rid of your wealth,
Baroness Moan. Rinse the people worth 50 million.
Well, yes, but there's not many of them. That's the point.
That's the problem. That's the problem.
And the point.
And absolutely, that's why you need a kind of overall tax strategy which fixes that.
So you put the top rate to 50%.
But 50% on someone who earns 75 grand is outrageous.
Okay, let's get to a call. Sam is in Manchester. What do you think? Has he got to raise taxes here, Sam?
Here's where the disagreement becomes much harder to reconcile. One side argues from principle that those with more should contribute more. The other argues from arithmetic, questioning whether there are actually enough high earners to fund the promises being discussed.
I think Steve's story is why, our system works. We need taxes because, as he said there, he's been, down he's had a bad situation. And he's getting help, and he's working his way through.
What he also said
he'll
was,
work again,
and he'll work. And it's great, and that's what we.
Yeah, but it's a transitional thing. It's not a lifestyle.
Yeah, but before you start any conversation tax, you've got to sort of decide, what do you stand for? Do you stand for a society that helps people when they need it? But
it's gone way beyond that now.
But you say that.
We don't
in
just
what
help.
sense?
It's become a lifestyle choice for a lot of people. We have 11 million people not working. 1 million of those people are young people who should be out there looking for jobs. And there was a big poll recently that said something like 35% of young people don't actually want to work. They'd quite like a lifestyle on benefits.
I'm sorry that you feel like that. I do
I
not
don't feel
believe
like
that.
that.
I do not believe.
Not how I
people
feel.
like to say that people out there, people on benefits, they're lazy and they just don't want to work. It's a lifestyle choice. I do not believe that.
Okay, that's a key difference between you. Lynn is in Tyne and Wear. Hello, Lynn.
At this point, the debate has moved beyond economics altogether. It's now about assumptions. One speaker sees the welfare system as a temporary safety net. The other sees it as an essential expression of social responsibility. Those starting assumptions shape every conclusion that follows.
Yeah, but it works very well in Denmark. It works very well in Australia. It's not perfect.
You like it?
I like the idea.
Do you like it?
Yes, I absolutely.
I don't. Some states in the US do that. So some states don't have income tax, and instead they have a land tax, house tax.
But it is basically a souped-up council tax. You're looking at people's houses. You say, how much are they worth?
Exactly.
It's going to mainly hit developers, not.
Well,
it's
he's
talking about houses. He's talking about people's houses.
It'll touch everybody, and it'll be basically.
And the problem is that. It's making an assessment on how much money you have based on the house you live in. And I think Carole touched on that point earlier. If you could live in a relatively modest house in in London, for example, that could be worth a fortune.
Yes,
but you don't have loads of money, and then you might have to sell it.
I've got friends in that situation, no earnings at all.
Yeah.
Bought a house in 1960. Now it's worth maybe £3 million.
So they would be hit incredibly difficultly.
It would be. I guess they'd have to sell it, but then there would be suddenly the market would be full of people in that situation selling their homes.
Yes.
Yeah.
So you would be wiping out a bit of value on those houses. I don't know.
It's also unhelpful to focus in on one group of people, either by earnings or whether they're working or not.
But that's what you want to do with a wealth tax. You want to focus on one group of people. And the thing is, if you actually do a wealth tax, most of wealthy people's money is tied up in investments which produce jobs and which produce money and which.
I thought you were in favour of wealth tax half an hour ago.
I was not.
Okay.
I didn't say that at all. I said the total opposite.
I thought you were in favour of wealth tax.
No, I did not. I said the total
I think the idea is
we've got to take our break.
That closing exchange captures the wider problem. Once the discussion moves between different kinds of taxes, definitions begin to blur, and even the participants disagree about what was actually being argued only moments earlier. What makes this debate interesting isn't that one side produced a perfect solution while the other failed. It's that they approached the same problem from completely different starting points. The left-wing guest consistently framed taxation as a tool for correcting inequality. From that perspective, redistributing wealth is not simply about raising revenue, it's about creating a fairer society. Carole Malone, however, kept returning to a different question. Even if higher taxes sound fair in principle, would they actually generate enough money without creating new problems? That's why so much of the discussion revolved around definitions. Who counts as wealthy? Is someone asset-rich but cash-poor actually rich? Should tax policy target income, property, capital, or something else entirely? Until those questions are answered, it's difficult to judge whether any proposal is genuinely practical. The welfare discussion revealed another philosophical divide. One side viewed state support primarily as a safety net that should help people recover before returning to work. The other saw it as evidence of a society fulfilling its responsibility to protect vulnerable people. Neither argument can be settled with a single statistic, because both are rooted in different assumptions about the role of government. Perhaps the most revealing moment came right at the end, when there was confusion over whether a wealth tax had even been supported. It showed how quickly debates can become tangled once broad ideas replace precise policy. And when that happens, participants often end up arguing over interpretations instead of addressing the original question. Ultimately, the debate never reached a simple answer on whether taxes should rise. Instead, it exposed something more fundamental. Solving economic problems depends just as much on how you define fairness as on how you calculate the numbers. What do you make of this debate? Did Carole Malone expose the weaknesses in the case for higher taxes, or did the discussion overlook the bigger issue of inequality? Share your thoughts in the comments below. And if you enjoy calm, in-depth political debate breakdowns like this one, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our next analysis.